and one, and it's going live.
Good morning, everybody. Good morning, Bay Area. Good morning, America. Good morning, the world. Thank you so much for joining us. This is Vinney and Beau Show, coming live right here in the San Francisco Bay Area, the most beautiful area in the country, I guess. We live here. We've been living here, Beau, for 39 years. I know you grew up around here. Is that right? Or you came from? How was that? I didn't ask you. Of course, I came from India on the East Coast, but then about 39 years back, we moved here, right here to the Bay Area. We love it to call it home. Welcome, Beau. How are you, bud?
Thank you very much. Will you just check your Facebook? Do you see it playing on your Facebook?
Oh yeah, you're on, buddy. You're
okay,
on.
Good. All right, good. I always want to make sure. So I was actually born in New York, in the suburbs of New York City, and then I moved with my family when I was 12 to California.
Got it. Got it. But you
but
made the Northern California as your home for
Yeah.
all these years, and for me, it's 39 years. Wonderful. We got married. We were in Ohio, by the way, from Washington D.C. Went to Ohio, worked there, and then we came out here and just have been splendid. So what are we going to talk about today, Beau? Yeah.
We're going to talk about a few things. One thing is, if you haven't got your ticket yet for REI BarCamp, it's tomorrow, and the ticket sales are going to shut down.
Yep.
We got enough people now, but we will sell tickets till about 3 or 4 o'clock today. So go on to reibarcamp.com, meet
Yep.
Vinney in person, along with David Green,
Yes.
and Daniel Ramsey and Michael Zuber, One Rental at a Time, Al Williamson, the Airbnb guy, lots of local guys. Tommy Christie's bought over 2,700 single family homes.
Yes.
So it's the best event locally that you're going to find. So you should all come out and go to reibarcamp.com. And then what we're talking about today is we're going to continue off of our conversation from last week, and we're going to talk about finishing the due diligence process.
Sure.
How to negotiate with the big commercial lenders, what you're looking for, how to get Fannie and Freddie to fight for you, right? And get the business. Now with rates so low, if the rates are dropping, I mean, an eighth to a quarter% less in rate, it means on a $30 million loan is huge amount of increased cash flow, right? So
right, Beau. Definitely.
Yeah.
I'm trying to recall from last Friday. I think we talked about, of course, selecting the right area to buy in any kind of, like office space, hotels, strip shopping centers, apartments, which we really specialize in, as you know, jobs. Emerging is the word we call emerging markets, the path of progress, the value add, all those great things. So we get that LOI signed, and then the letter of intent. And by the way, just to let you know, we signed the $35 million deal. Hey, this 2-3 days back, and the sellers had a meeting with us for 46 minutes. We timed it. The broker, the seller, with myself and my partner, had a meeting with us for 46 minutes, 45 minutes, and then we got awarded this contract in Florida. I'm very happy about it. So we're going to be starting the due diligence, by the way, over there right after the contract is signed, executed. We call it the PSA, Purchase and Sales Agreement, is fully, attorneys are working now from both the sides and so forth. So let's talk about, after that we talked about was due diligence. That is the day you sign, execute the contract, you definitely want to get to the property quickly. We even do early walk-in into the property. Some of the sellers allow you. In other words, while you're working on the contract to solidify in, fully executed, you could do a 1 or 2 day early walk into the property, it's called, and that's possible. Let's talk about due diligence, right, Beau? We talked about we got to get the physical due diligence, we got to get the financial due diligence, because all those two parts are so important. I mean, once you buy that baby, it's 10 million or 20 million or 30 or 100 million deal. Once the seller gives you the keys, it's your baby. If the sewer lines are down, if the inside the walls is mold, or if the roofs have the tiles blown off or whatever, all those are your babies. So due diligence is very important aspect of any kind of purchase. And we prefer, my companies, we have had 2 acquisition companies and 2 management companies, and we always have hired outside company to do the due diligence because they are professionals. Guys, it's worth it. I'm telling you that $5,000 you pay or 10,000, whatever we pay, it's well worth it for larger, apartment complexes like in our case. And we always do the inspection of 100% of the units, not a sampling, but every single unit is inspected. And then, of course, the physical inspection outside, the foundation, we talked about the sewer lines, the cameras running through the sewer lines, tiles, roofs, all that stuff. And then interiors.
So, okay, let's back up because this is kind of good because you just got one. You got your, so you initially got an off-market deal that was being presented from a broker. Have you done previous business with this broker? Or how did you
Yes,
find
we
it?
have. We have.
Okay.
I think that is the key, guys. Please set your business correctly. I would like to tell everybody who's listening to now and later, we had quite a few reviews, and thank you for sharing and passing it along. And please put your notification on, if you don't mind, from Beau and me, so that you can be, asking us questions, guys. This program we do is for you, and to give the knowledge, free knowledge, that people pay thousands of dollars. Some people are flying in actually today from Santa Monica, thanks to, John, and they're going to have lunch with me here, and, I'll be teaching them. But let's talk about the key thing is due diligence is such an important part of any kind of purchase, right? Yeah.
Yes, it is.
Yeah. so
So obviously, sorry, my email, people started buying REI BarCamp tickets, and I see it popping up.
oh, okay,
So,
okay.
I just turned it off because it was just
Sure, sure.
distracting. So anyhow, um, so you found it from a broker. It's the property's in Florida, right?
Yes, it is.
So,
Yes. Yeah.
is it in the Orlando area as well?
It is. It's in the
Okay.
Orlando area. I've been really high, like I've been saying the high, not high, but like very good, thinking about the market. Orlando really excites me. Jacksonville, Orlando, Tampa, Clearwater, all that area. Miami too. I know Grant Cardone is buying a lot of stuff there, which is exciting. It's in his backyard. We have not gone down that far to Miami. I kind of worry about all this ocean, the tornadoes and everything. So we like it a little bit more inland. But you're right, it's there. We just bought Bentley, as you know, on June 27th of this year, not too far back. I mean, few months back. And now that was $52 million. We closed it in how many 54 days or something from start to finish. So that was a good track record, and now we are planning to close this also within 60 days, and so forth. Money is just flowing like crazy. People are knocking on the door. When is the next deal coming? So I like that. A lot of passively people are investing in our deals. But let's go into again, the due diligence. So due diligence is very important, the physical and the financial. Then after that, we get into now loan origination, right? Once we find out, hey, this is the property we're gonna buy, we say all check, 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 all that. Now we're gonna order the third party reports, the environmental report, it's called, and the survey report. Those two reports are very important just to find out again if this is the property you're going to buy or not. If there is chemicals in the soil or something like that, then we have to do the second study. It's called phase environmental study phase number 2. So phase number one, then phase number two, then three, then eradication comes and so forth. That's a long process. So survey also, what we try to do is try to ask the seller, to ask the seller, hey, do you have the phase one when you bought it? Get that from them, because I'm sure it's going to come out in the open, whatever they found it then, right? And the second thing is to ask for their survey also. And we try to call the same company back many times, survey, because then they can update the survey, we call it. It costs less money. And then also for phase one, sometimes we ask a new company to do it, because then they can do a very fresh look at the whole property. So that's another way to do it. Now let's talk about the broker. I mean, that's your specialty. I want you to talk about that, Beau. Yeah, I want everybody to know. My partner here, Beau, is one of the best right here in the Bay Area, and he can write loans all over USA, guys.
Yeah.
Yes.
So I specialize in the short-term bridge loans. Okay, so like when you're getting started often and you're kind of not in the 30 to 50 million range, we can do bridge loans that big, but typically our bridge loans are from 1 million to $20 million.
Okay.
And so we're able now. Everything comes down to track record, right? I mean, really, in when it get into commercial lending, it's the biggest weight is on the track record and the personal financial statement of the borrower. So that's really does a debt service coverage ratio? Does it is it at least 1.25 or sometimes if it's a really deferred maintenance building, then they'll go lower because you're rehabbing the property. So on our bridge loans, we'll typically lend 70 to 80% of the acquisition price, and one then we'll hold back 100% of the fund control. So
Yep.
like if they need to turn each unit and each unit is $30,000 to repair, or $20,000, that would be in our funds control. We have a third party that goes out, and as the work is done, the funds get sent to the borrower, back to their account, and then they can pay their contractors and workers. And then after the bridge loan, our bridge loans are typically 1 to 3 years, and then you refinance with Fannie or Freddie, right, into a longer term loan, or you're just doing a short term flip. You're stabilizing and you're going to sell it. So
Sure.
those are the options. But a lot of small to medium size people need bridge loans. And sometimes even big time syndicators need bridge loans. So it really depends. There's always people always need money. Even the wealthiest people in the world borrow money. Everybody does.
They borrow a lot of money,
Yeah, they
Beau.
borrow more money at a cheaper cost, essentially.
That's
It
so
really
true.
comes down to the track record. And I'll fund fix and flip loans for single family homes. I'll fund ground up construction when people are selling. We have a product we're rolling out where we fund we call it fix to rent. So we'll do like a fix and flip loan, then it rolls into a permanent loan. It's actually 2 loans at once. So now you can keep it all in your LLC. You don't have to go through the bank process. There's tons of money flowing. You just need to know how to navigate the waters to get the right money. And then also, I always tell people you also have to have a financial friend network, right? Like if I'm doing a flip here, for example, I want to network with guys like you, and you might have a couple $100,000 laying around in an IRA where I could tap into. So OPM. So at REI BarCamp, same thing. We have Daniel Blue is going to be there, and he educates people on how to tap into $26 trillion of retirement accounts. So I think that's important as a multifamily syndicator and a real estate investor in general, is to know that there's money and how to tap into that money, because essentially you're doing bigger deal because raising money is easier for you now because you have a successful proven track record, and people want to invest their money with people that have a track record that have shown success 27 times.
Surely, Beau, you're 100% right. I definitely want to touch on something which you just mentioned. Guys, sometime we are always trying to say, should I get a broker involved? Of course, in real estate, we say, hey, build relationship with the brokers who are going to get you the listing that, the pocket listing, or in my book, as you know, I call napkin listing, because napkin listing is the one when people are just telling the brokers, hey, I want to sell this property. It's very early stage. I've been very successful in getting lots of properties that way. I do want to also say what Beau just mentioned. Always get a loan broker involved. I'm telling you, 0.5 or 1% fee is nothing. It's so well worth the investment, because in my lifetime, I've had 3 brokers now in multifamily. Back in Texas, I had 2. And then in Florida, we have now with Northmark, which give so many big loans, 30, 40, 50, 70. I got approved for, with my partner, $70 million loan right there when we were looking at another property. So the thing is, you got to really have somebody who could tell your story, who could share with you how to qualify, what's the whole package. Brokers like Beau have so much knowledge and so much, relationships. That should I should say. And Beau, you helped me out, man. I'm telling you. Let me go back to the property we just sold in Atlanta. I was in a bind, with Fannie Mae. Fannie Mae wanted me to, pay back the loan, or whatever we might say. You got me 15-day. I've never seen anything like $8 million loan on my signature, and you got it in 15 days closed. I mean, people met me right here in Black Hawk Plaza. I remember you were busy. I think you were in Las Vegas. They came here. They flew that night to Atlanta. They surveyed the property, everything. They got the inspection done. Survey. I mean, I just don't know how it happened. I was in Japan when the loan closed within 15 days. So thanks to you, I would have not really done that. And the fee was so inexpensive as compared to my other other loan brokers in Texas and other places. They were almost 2 points more. I'm telling you today. I don't know if I told you before, but you saved.
Oops. Oh, we just lost Vinny. His Wi-Fi must have just dropped. Bear with us for a second here. Let's see if he can plug back in. Let's see if he messages me. Uh, let's see here. Um, let's see here. He's not back yet. Give him 1 second, guys. Sorry, I got another loan I'm trying to fund here, but anyways. So yeah. So anyways, it's good that I have friends like Vinny, because he needed some short-term capital, and I was able to put the deal together very quickly because I have relationships. I've been in lending for 19 years, and the private lending space, the bridge lending space, it's difficult because there's always problems, and I have to resolve problems, even little stupid problems like insurance and things like that. The lender wants a certain insurance policy with certain, so it's going back and forth. People are always trying to close tomorrow or close today, and I just got the appraisal, so it's there's always urgency, and so you got to be able to handle a lot of stress for people, and the thing is that I pretty much know the deals are always going to get done. I might have to work things out, but I can normally navigate pretty much everything. One thing I'm seeing now is in the flip space. Um, when the appraisal is done, we often get an ARV appraisal after renovated value. And so an appraiser is not going to push, like the borrowers always think their house is going to be worth X, when they're done with the renovation. But they got to understand an appraiser's job is not to give them the highest value. The appraiser's going to look, so we attach a scope of work and a budget and then it goes to an AMC, third party appraisal management company. Typically, some of my investors, they have their own internal appraisal process. It just depends. And then it gets appraised, and I don't have much interaction with that appraiser. So what we have to do on our end as the borrowers is to write a summary and do a really detailed scope of work. These are the finishes I'm doing. I'm doing quartz. I'm doing, these type of cabinets, so, and spell out what you're doing. So it puts the property after renovated in the best light possible. So you get the highest ARV appraisal, because our lenders, as the market's going to get tight, it already is. It's getting tighter. I don't know why Vinney can't get back in. Let me. Oh, here he comes.
All right, we are back.
As the market gets tighter, right there he is. All right, he's back.
Sorry about that. I don't know what I did or didn't do, but kicked me out. But no problem. I'm back. Yes, sir.
Yeah. So let me just finish what I was saying to them.
Please.
So as the market gets tighter, right now money's flowing like never before, except maybe 2005 and 6, right? It's just flowing.
Yeah.
But it's going to get tighter and tighter. That's where relationships make all the difference, right? Like right now, it's pretty liberal and money's flowing. But when there's a scare in the market or whatever, that's when the relationships are critical, because that's when it's really difficult to get money. So if you have a really good track record, those are the loans most of the lenders are going to make as the market tightens. So you really want to document your experience and have a little spreadsheet with properties you own and flipped, and your rental portfolio, and how much you've renovated, because people want to see experience. So if something comes up, like an appraisal comes in short, there's compensating factors that I can say, listen, this guy's flipped 30 properties. He's good to go. Do you have your cell phone on?
Oh, yeah. Let me see. Oh, no. It's not on. But I can go on the Facebook Live. I know somehow it got disconnected. Yeah, you are there, but I'm not on there yet. Let's see. You want to join me in there? Sorry about that.
You're here now. I see you on mine.
Yeah, I see you there, buddy. Yeah. No, thank you, Beau. I appreciate. I don't know what really happened. I got out of offline and so forth, but we are back. It's 10:22 right now. Looks like. Is that right? Right about there. So no, that is so important. What you just mentioned. The experience is so important, and that's why we say please document. And I say credibility kit. I call it in my academy, that you put everything, the kitchen sink and underneath, into there, because the seller wants to know that, the lender wants to know that, and the investors want to know that. If you're using other people's money, OPM, you got to put yourself in the best perspective, in the best place to show your experience. And then nowadays social media is so catching on. I mean, LinkedIn, make sure your LinkedIn profile is really up to date, and you want to make sure that you're writing some posts and blogs and things like that, because people want to know what you're doing, what your track record is. You're so right. Like I was thinking about the Freddie and Fannie fighting. I would love to share that with the audience. The thing is, once you have a good property, that's the key thing. The property needs to be good, underwriting well, good NOI, net operating income, and everything. And then your business plan, what you're going to do with it. See, the lender likes to know what you're going to take this property to, what value add you're going to put in, what you're going to increase the rents and all these, and cut the expenses, and what's your capex budget. That's the other thing the lenders want to know. Where are you going to inject the money? Because see, the thing is, let me just talk about that. 70% of the loan is given by the bank, or 80% of the loan, we are putting only 20% down or 25% down, right? That's why they want to make sure you are a good operator. Operator is the word of that asset after they give you the keys. See, they own it. Let's think about it. I mean, they own it. They have the mortgage on it and everything, but they are having you to manage it and guarantee the loan, and or Fannie and Freddie are of course, non-securable loans, right? What do they call it?
Non-recourse. Non-recourse.
Non-recourse loans,
Well, let me just interrupt you because I think this is a good
Please.
point.
Mm-hmm.
So somebody that's listening is a newer syndicator right now, and they're listening. Hey, I'm going to start buying. I've been buying some property, but I haven't bought a big multifamily property. So they go through your training, they learn a lot. Now they identify a 100-unit building in Indiana, let's say.
Yep.
And the purchase price is $6 million.
Okay.
Okay. And the borrower is getting a loan for 70% of $6 million, whatever that is. Say
Okay.
$3.5–4 million.
Yeah.
So with Fannie and Freddie, the signer for the loan needs to have a net worth of at least the loan amount, correct? Typically.
Exactly. At the lower level, under $10 million loan, your net worth has to be more than the $10 million loan. But after 10 million, the equation is not 1 to 1, it changes. And if you have done some loans in the past, then you can do, bigger amounts. It depends on how well you have been able to have a track record, they call it, to pay back the loans. Yeah. Mm-hmm.
So let's look at the $10 million loan. So let's say it's me and my net worth's not $10 million. Okay. So let's say my net worth's $2 million.
Sure.
Let's say I didn't have a net worth. It was 500,000 or 200,000.
Sure.
Now it's a great deal. It's a great property. What are my options? How do I go out and find somebody, or is there an option that I can bring on a signer? How do you do that?
Yes, you can. Definitely. I'm glad you said that, Beau. So, in the commercial lending business, it's the key principles, we call it, right? So, we can have few people to sign on the loan. That's what they call it. And they combine the net worth of all the key principles. So, in other words, you could get three people. One could have a net worth of 5 million, another one maybe 3 million. And if you have 2 million, that's 10 million right there, right? And
Mm-hmm.
that's how it works. Sometime, but please, don't take it for granted. The thing is, sometime talk to the loan brokers. They can even give you some kind of leeway because sometimes local banks give you loans which may not be 1 to 1 ratio, so it has
Yeah, and
happened.
our loans aren't 1 to 1 ratio either. Our
I
bridge
see.
loans.
Mm-hmm.
So oftentimes you're going to get a bridge loan because you're stabilizing and then you're going to refinance. It's easier to refinance with Fannie or Freddie because now you've created a ton of equity by
Sure.
forcing appreciation.
Yeah. That's the thing, I mean, I remember, I think I mentioned it before, like in Houston area, 13 banks, local banks. My broker, Randy Brown, Brandon Brown, wonderful person. He gave me 11 loans there. I never even saw who is giving me loan or anything. He was doing all the work and put the metrics together and then recommending Vinny go with this loan or this one. It's the positive, this is the negative, all that stuff, right? But Fannie and Freddie also have great loans, by the way. And then Fannie Mae and Freddie Mac, we call it. It's the left and the right hand side and the left hand side of the, for government. They provide loans and they start from the January 1 and then start giving billions of dollars. And at about September or so, it gets to be depleted, is the word, right? Because they've given out so much money. I just heard that they have given now 100 million more. 100 billion? I don't know, something like that, to even more purchases from now until December because a lot of that money was gone. But let's talk about it. What that means? Oh, we also have small business loans. They are Freddie Mac small business loans. That's called also, by the way. So if you're looking for $1 million, million and a half, $2 million loans, you could go that way also. Conventional loans are another term. CMBS is another loan term. So all those things. But let's just keep it simple. So Fannie and Freddie, if you're doing big deals like the one I did, $52 million one in Orlando, our broker from Northmark, all right, she was able to go to both of them because she had great relationships. She's the vice president there of that branch, for the thing. And they were able to start fighting. Holy cow. I love that. When they look at the borrowers and they say how many deals we have done, and my partner and I have over like almost 600 million, under portfolio. So all that goes a long way. So then Freddie, this was so funny. There is something called rate lock. Rate lock is while you are doing the application and everything, guys, and you want to close within 3 weeks after that, or 4 weeks, or 6 weeks, then they do a rate lock at that percentage, so that even if the interest rate is high, when you're closing, guess what? You are locked into that lower rate. So we were trying to talk to them about it, and then we didn't know should we go to Freddie or Fannie for this Bentley deal, the Bentley at Maitland. By the way, if anybody is from Florida, Orlando, Florida, hey, I'll be speaking. I'll be going there middle of October, and I'll be speaking at meetup groups and high net worth groups over there in Orlando, in Tampa, in Point Clear, Clear Point. I don't know what is Clearwater, whatever it is over there. Very high doctors group is inviting me with the dinner and all that. Then I'm doing the meetup with TJ Hines. A lot of people are going to be there. And then in Orlando, I'm there. And if anybody wants to meet me at our property, let me know too. So we'll do some property walks and all that. I go there every other month now, as we will be buying more and more and more. So let's talk about move the needle ahead. So Freddie said, "Hey, we're going to give you 80,000 rate lock fee waived." Holy cow. So they said they will not charge us the rate lock fee, which usually is. And we said, okay, you're done. So they gave us the loan at 3.82%. And the new deal we are getting now, we were quoted 3.62% now. So the rates have even gone lower, right?
So like right now, it's a good time. You're going to lock in 5, 10 years, and the rates aren't going to get probably in 5 years time. You're going to have rates in the 5 or 6. So your cost of funds right now, are these loans sometimes, are they able to be assumed? Like if you were like, let's say this property you just bought for $52 million.
Yes.
Sometimes if you want to sell that property in like 4 years, could
Oh,
the buyer,
totally.
they could assume that loan for an assumption standpoint?
Exactly. All the loans are assumable. We make sure it's in the terms, clauses. And usually it's an assumption fee of 1% of the loan, because, they want to make some money too. The other part we look for also, Beau, it's called supplemental loan. Supplemental loan. What that means is, because it's a 30-year amortized, 10-year fixed loans that we get. We get 10 or 12-year fixed, so that we don't take 7-year or 5-year fixed, because we don't know. Interests might be too high. So syndicators like us, we take 10-year span, loans with 5 years of interest only. Wow, that is amazing. So what that means is, as we do value add, the value of the property increases. If we have to pay down the principal, it's dead money. I call it dead money because it's the equity. It just keeps on increasing the equity, which is dead money. It doesn't do anything unless you sell the property or refinance it, then you take the money out of the equity. So it's good to have, the clauses like assumption clause. The prepayment penalty is another one I want to talk about, because the key thing is prepayment penalty can be as severe as 5, 4, 3, 2, 1. Wow. That means 5% of the loan amount, and when you prepay, is going to be the penalty. If it's a $10 million, then 5% of 10 million will be your penalty, and so on like that. Okay. We try to do it to lockout period of 3 years, but after that, it's only 1%, even though our loan is 10-year fixed. So all these things are available if we ask the broker, right? And it's better to find a loan broker like Beau, my friend, who's very clear, very open. And thank you so much, Beau. I mean, you have done, I mean, the place we bought here in Blackhawk, you were my agent also. You have everything, man. And Mario, our friend, again, really great guy. Let's shout out to Mario. He brought his contractors, and you guys were amazing. And they did such a good renovations of few things and kitchen and other stuff like that. We are really fortunate. So relationship building is so important. We are not an island, guys. We are not. We should not be an island. We should be building people around us. And the more we build relationships, the more it comes back.
Very true. I've learned that from you. I watch you. You know, you're always there. You're a very generous person. You know, every time we're out to lunch or dinner, you offer to buy, and so I love that about you and your
Ah,
energy,
thank
because
you.
that's right. Like the more people, what's the saying? The more people you help, the more whatever that saying is. But
Yeah,
it's
exactly.
very
Zig
true, right? The
Ziglar.
more people you serve, you're
Yeah,
going to end up getting what you
more
want.
people you help,
Yeah,
no, if you help enough people get, enough other people get what they want, you'll get you want, right? That's
yeah,
probably something
yeah.
like that. But that's exciting. I'm really excited about tomorrow. I'm just so pumped up. I'm looking forward to. Beau, you have put so much effort into it, into this event, and God bless you. And you do it annually. And maybe in the Bay Area, so much is going on in multifamily. We might even do one like that one just for multifamily. Maybe we'll think through and all that, and we can try to plan that together. Maybe first of the year, I'm thinking, and we can have 400 people, 300, 200, even 200 people, we can have, and we can teach them and show them how to invest passively, and how to get retirement money to work for you. I just would like to talk to anybody who's listening or watching us now. Please look at where your money is, and if you're making money of 2% interest, inflation is 2%, you're losing ground. Losing ground, because what money is worth today, it's not worth tomorrow. In a year, it's definitely not going to be worth $100, is going to be worth $98, or less. So it's so important for us to understand passively you can invest in real estate with people like me, and Beau knows a lot of people, and syndicators, and all these good people with good track record, so that you can earn, gosh, 8 or 9% per year, like the what you call it, the preferred rate. I'm not selling any program or anything to anybody, but there are avenues that you can make 7, 8, 6, 7, 8, 9%, and then plus gain, the equity gain also, we call it. So cash flow plus the equity gain. So it's, please reach out, because so much
Plus also
money.
tax benefits too, even on the passive side, right? They're going to
Oh
get a
yeah,
K1.
definitely, definitely. People can learn from me by just texting the word "learn," LEARN, or to invest with me. Syndication is the word, SYNDICATIN, and then to 474747. So if you would like to really apply for mentorship in my academy, please text the word "learn," and then John, my business advisor, will be getting back to you, and we can find out if that's the right match. And then passively investing, I'm getting another word called invest. It's not there yet. I'm going to call, and then we're going to get that one. That means you want to invest in our future deals, and we'll meet with you, we'll talk to you, and see what your goals are. We have to have pre-existing relationship, and then you can passively invest with us also. If you're accredited investors, then we could get you in quickly, so forth, huh? So all right, Beau, so let's talk about, I know we were talking about due
Hold on one
diligence.
second. Hold on one second.
Oh, surely, surely. Go ahead. No problem. I'll keep the fort going here, like Beau was helping me. So essentially, the thing is, you want to diversify. See, stock market correction is coming. It is coming. I've already taken out a lot of money into cash, because the thing is, I'm not. Nobody's got the crystal ball. But where the market is right now with the PE ratios and everything, we are going to see some adjustment coming in, and
Yeah,
so please diversify. Look at that. Hi, Cynthia. How are you? Good to have you. Oh my gosh. All right. Tomorrow, looking forward to, crushing it with all of you guys over there in San Ramon. Guys, come on, San Ramon. Come on, Walnut Creek. Come on, the Bay Area. Saturday morning, we're going to rock it. And we're going to also bring out my books, the top seller, international top seller, and raffle them off, give them free to as many people out there. It's going to be exciting. I can't wait. I'm so fired up.
So, anyways, I think next week we'll jump onto the private placement memorandum and the syndication
Sure.
process
We will.
and getting. Yeah. All right.
Perfect.
Well, I know you're busy. Cynthia's going to help put the notes together for tomorrow, so we're ready.
Yes. Oh, so good to see you, Cynthia, after such a long time. I know. So we're gonna
She's been
just
hiding.
crush it. Thank you, guys. Thank you, everybody, for joining. Remember, Vinney and Beau Show coming live every Friday, 10 a.m. Put a notification, put it on Google, say reoccurring. That's all you have to say, guys. And it's going to come right there. Hop on the, Facebook and ask us questions and then join us because we are here for you, not only in real estate, but also in the business of increasing your revenues and sales and marketing. I mean, that's what Bo and I have been doing, So
More
anything
money.
we could help you, anything we can help you in your inching up your business higher and higher. That's where we are here for. So
And
God
Cynthia
bless you
needs a lot
all.
of motivation.
Yes,
Cynthia needs
yes.
some motivation right here.
Oh, I love it.
All right, guys. Thanks for watching.
Thank
We'll
you,
see you guys
guys.
tomorrow. REIBarCamp.com.
Yep. See you all. Bye bye. Thank you, Bo. Thank you, Cynthia. Bye
All
bye.
right.